Welcome to the Nifty 50 weekly technical update.
Currently, the price may test a support area in the demand zone as it has recently tested a resistance level. We previously mentioned that before reaching this area, the price might attempt to find support in the Fibonacci golden zone or around this support zone. However, the price didn't find that support. Instead, it sharply fell within a significant gap, leading to a direct test of the demand zone. Now the price is trying to initiate drawdown experienced. If we examine the Bollinger Bands, the price has already broken down through the lower band. Typically, the price oscillates between the upper and lower band, and if it breaks out of either band, it signifies a change in price direction. Currently, a similar situation is unfolding where the price is attempting to recover, although it still faces resistance. The sharp fall created a substantial gap, and the price action theory gaps often act as support or resistance levels. This is what we are observing now. It's challenging to determine if we are in a reversal zone, so we should wait for either a reversal pattern or a swing breakout. The latest rejection signals a need for caution. Ideally, if the price can establish some accumulation or range, it could lead to a sustained breakout. Conversely, a breakout and recovery at this point can be concerning because the overall trend is down. It's important to remember that price movement often resembles a zigzag pattern. Price can rise and fall and encountering counter trends in both directions. According to the charts, we are currently witnessing a pronounced downward momentum, and we have identified several counter trend opportunities. This could also be perceived as a counter trend if the price doesn't create a new higher high, a new swing breakout, or at least establish a range breakout. Therefore, caution is advised. Now let's look at the weekly chart. It clearly shows a downward, and from a classic chart pattern perspective, we can view it as a bullish pattern, as the price is still above the 0.5 level of the Fibonacci retracement. And in this context, we have identified a channel suggesting that if it functions as intended, there will be no significant resistance ahead. The first resistance would be the last swing high, and we know that based on bullish patterns, the price might eventually exceed 70% to 100% of this bullish pool. However, if this pattern fails and the demand zone cannot hold, the price may decline further. Notably, there is a significant gap around the 0.61 level, which serves as a critical support area due to its magnetic pull on the price, typically causing it to test these levels. Returning to the weekly chart, the prediction still points downward unless the price consolidates within the Fibonacci golden level or this demand zone. Checking the daily chart, we observe that the price is currently facing resistance at the moving averages. Historically, the price has been rejected from the moving averages zone, and we might see the same scenario unfold again. Analyzing the Bollinger Bands and the RSI, and the price is hovering near the Bollinger Bands and the mid band. The mid band acts as a strong resistance level, and the RSI is still below the 50 mark, indicating bearish momentum, while the MACD shows negative signals. Additionally, the Ichimoku cloud is acting as a resistance barrier. In conclusion, we should wait for a breakout from the Ichimoku cloud to better understand the direction of future price movements. Thank you for attention. Welcome to the Sensex technical update. We just analyzed the Nifty 50 chart, and we are observing a similar pattern where the price is facing resistance in a key demand zone. Last week, we noted this candle pattern, and there is a high possibility that the price may reach this zone again, or it might attempt to find support in this area. However, we are seeing signs of a potential market crash or significant price drop, as it has created a large gap and broken down from this area, forming a new lower low. The price has already reached the demand zone we discussed last week. Currently, the last week's area that we identified as a potential support zone has now become a resistance zone. The price is facing two hurdles, the resistance area and the previous week's demand zone. Additionally, the price may encounter resistance at the upper band of the downward channel, indicating a continuation of downward momentum. The pattern reflects a counter movement, as we have observed previously. When the price moves upward, we often see a counter trend in a downward direction and vice versa. If we examine the Bollinger Bands, we notice that the price has already broken below the lower band and has reached the demand zone. Price action typically respects the Bollinger Bands, maintaining a range between the upper and lower bands. However, when the price breaks out of the range, it tends to come back to the area. Currently, the middle band of the Bollinger Band is acting as a resistance level, suggesting that the price might test this mid band again before potentially retreating. Before confirming any reversal, we need to monitor a few indicators. For a reversal to occur, we must seek certain conditions meet. Otherwise, the price may continue to make new lower lows or enter a sideways trend before a potential breakout. Analyzing the white chart, it appears to display bearish pattern tapping the 0.5 Fibonacci level, which is indicative of a classic bearish structure. If this pattern works out as expected, the breakout target will likely reach between 70 to 80% of the pullback or potentially 100%. However, the price is facing significant resistance at this current level, and if it doesn't break through, it may continue its downward action. If we check the daily chart again, the price is still facing resistance from moving averages. Previously, price were rejected at these averages, and it appears we are approaching these levels once more. The price action might mirror past behavior, and it takes some time before moving forward. The current analysis shows that Bollinger Band indicates resistance. So once again, the price could face challenges at this point. The relative strength index or RSI is currently below 50, showing downward momentum. The line crossing below the zero line and the histogram also indicating negative trend. For the price to reverse its current trend, it must break through the cloud resistance and clear the pivot point established in the market. And if this doesn't occur, we could see further resistance followed by a rejection in this area. To summarize, it may turn out to be a counter trend, with the price potentially establishing itself back in the previous area. To confirm where a reversal is occurring or to identify the bottom, we should confirm three key indicators before concluding anything: the creation of a new higher high, a swing breakout, or a breach of the last resistance area. Until these conditions are met, we might expect the continuation of downward momentum. Thank you for watching and stay tuned. Welcome to the S&P 500 weekly technical update. Last week we discussed that the price broke below a certain swing low. It would likely lead to a market crash, and indeed we experienced that crash. Following that, we updated our analysis with the latest candle, and we retreated that market crash was underway. During such crashes, it is wise to adopt a wait and watch policy, because price action tends to become very volatile. This volatility makes it challenging to identify support, resistance, or reversal zones. Tools and indicators often stop functioning effectively in these situations, leading to increased panic among investors and retail traders. This panic selling can further increase market volatility. Now, with the crash having occurred, we noted that there are a few sensitive and lucrative demand zones worth mentioning. However, the price action has broken down past both of these demand zones. We can consider that the price is now trying to establish a new demand zone. Currently, the price is moving sideways, and we believe it will attempt to settle around this area or potentially create a new lower low or support level within this significant zone. We may see fluctuations within this range, but this doesn't not yet indicate a definite bottom or reversal zone. In our previous updates on the last two indices, we established that confirming a swing low requires three scenarios: a sideways breakout, a breakout leading to continuous new swing highs and higher lows, third a new swing high forming at the latest rejection area with a closing candle to confirm the reversal. If none of these scenarios occur, we can expect the downward momentum to continue. Analyzing the width chart, we observe a continuous downward momentum characterized by a strong downtrend with a trend angle of around 80 degrees. The price action is currently facing resistance from the moving averages. Historically, when the market has encountered resistance at these moving averages, it has experienced rejection. At present, the price is again testing this moving averages area, which could lead to further declines back towards the demand zone. Reviewing the Bollinger Bands, we mentioned previously that price action struggles to sustain itself outside the bands. Whenever there is a breakout above or below the band, the price tends to return towards the band area. Currently, the price has broken down below the lower band and appears to be trying to return to the band. This situation indicates a counter trend unless it propels further downward. The Bollinger mid band is currently acting as a resistance. Furthermore, when we look at the RSI, it indicates a continuation of downtrend. The Ichimoku indicator shows that the price is far from its pivot and cloud, attempting to gather support at the Ichimoku baseline and conversion line. However, this area doesn't confirm a strong support and appears weak, suggesting a continuation of downtrend. In summary, our analysis indicates a clear market crash and sustained downtrend. We advise you to remain cautious until a reversal is confirmed. Happy trading and thank you for watching. Stay tuned.